Now, it drives it lower until maybe it levels out 15 minutes later, and then it crosses back up above the volume weighted average price. So this is what I call chase the gap or wait for VWAP, is what we're building into a strategy as well. So the stock gapped up, it, ran for a few minutes, pulled back, then it gets back above that daily price, average price 22 minutes into the day. So that's where I love to buy gaps, because at that point it says, okay, we had an event. It might have been an earnings report, it might have been an upgrade, it might have been just nothing, who knows? Maybe their competitor reported earnings, or just the group is hot. So all the rocket stocks are going, this one's going too. It's pulled back, it's back above VWAP. Now I want to get involved in this hot group. So it starts to rise a little bit, stop underneath the low of the day, and 60% of the time, it won't violate that. 40% of the time it will, but it's a real nice tight stop. And I'm making those numbers up, but I'm saying the majority of the time it does continue, especially when you have a clean chart, with a stage 2 uptrend on the bigger time frame. So then to start, managing that, and what you'll see a lot of times during the day is that the buyers are in control, and the buyers, the institutions who want to buy it, will give their order to Goldman Sachs. Goldman Sachs will say, oh shit, the stock's gapping up. We need to drive this thing down. So they'll short some shares to try to drive the price lower, short 50,000 shares so that maybe they can buy 200,000 shares at a lower price. That turns that VWAP sideways. And now people are starting to say, hey, the buyers are gaining control here. And now Goldman is long 150,000 shares near the lows of the day, if it continues to follow through, out of this million share order they have to fill. So throughout the day, what you'll often see is that strong stock, it'll rally up, it'll, here's the VWAP, it'll run up, it'll pull back down towards that VWAP during the day. It just magically bounces from it. It'll do it 2 or 3 times a day sometimes in that same stock. And I don't like to buy the pullback to the VWAP because sometimes it'll fail, right? So I'm starting to think, protect my profits from chase the gap entry, or maybe I've sold a little bit because it hit daily R2 or daily R3. And then, when it, not necessarily if it hits those, but so on an intraday trade, if it gets to daily R3, let's say, because I bought it already a little extended, that's my cue to say, this could be where sellers show up. It's a level of interest. So I'm not going to sell it just because it hit this pivot level. That's foolish. It might run right through it like it did R2. So instead I look at 2-minute bars. And as long as each 2-minute bar shows a higher low, I stick with my first third. But as soon as it breaks a lower 2-minute low, then I sell my first third. I don't care if it keeps going higher. That's not the goal of that. The goal isn't, hey, I'm going to buy this and hold it till next quarter's earnings. The goal is I'm taking some risk off. I'm in a position of strength. So then if the stock, let's say, what do we say? It was 27 when I bought it. Let's say it runs to 28.75. I sold some at 28.70.